All right. Hello, everyone. Hope you're all doing well. So, not surprisingly, I think the market is kind of starting to come apart. And the reason why I say not surprisingly is because this is what we've been talking about over the last week or two. We got some extremely bullish sentiment readings. I remember, I guess, I don't know, maybe last site here, Market Watching, is like every single headline was like, oh, going to be another great year like 23 was. And then you get all these things where it's like, oh, I was wrong just like everyone else. Well, no, not everyone else is wrong. For every buyer, there's a seller. For every seller, there's a buyer. The people that bought before the market went up were right. Okay. So whenever someone says, oh, no one saw it coming or whatever, you got to just question those people. They're not people that I would invest with myself personally. So interest rates, I guess the Fed minutes came out and they're like, all right, well, we might still raise rates. Not surprising. Here's the thing: when we get really bullish, when everyone and their Aunt Mary is bullish, when people don't normally invest in stocks or bullish, it's time to pay attention because that's a bearish dynamic. I know it sounds counterintuitive, but think about it. If the vast majority of investors are bullish, what do? They go and they invest their money. They invest all their available funds. And when they run out of these available funds to invest, what happens? Well, there's no more money to invest. Markets only go up if there's buyers. Markets go up because a buyer might come into a market that's got a big order, buy 50,000 shares or something. Last trade was at 21. Well, maybe there's a seller around and it says to the buyer, you know what? You got to buy 50,000 shares. I'll sell them to you, but I'm not going to sell them to you at 21. I'm going to sell it to you at 22. If there's not enough supply around, the buyers have to force the prices higher. They have to be willing to pay a premium. This is what makes the market go up. All right. When the market runs out of buyers, it doesn't matter how good the news is. Like we saw on Nvidia. Nvidia had these incredible blowout numbers, and what happened? The stock didn't go up, and that was a sign that guess what? It was going to go down. So that's what we call action. It's not something you can quantify, but think about it. Company has these incredible blowout numbers. The stock ends up going down. Okay, it didn't go up for a few days, and then it ended up going down. Well, why? Well, it's because everyone who wants a position in Nvidia has it. So it doesn't matter how good or bad the numbers are. If the market runs out of buyers, it's not going up. All right. So when we look at charts, when we think about technical analysis and trading, we have to think in terms of psychology and supply and demand. Forget all this garbage they tell you about. I mean, not that it's garbage, but it's not what we do. Earnings, and sometimes we pay attention to stuff like that. But this is about understanding supply and demand. Picture an old market in the Middle Ages where all the farmers came into town and all the people came into town to go to the market, right? The farmers would come from all around with their goods. The people will come in to buy them. Only one way in and out of town, all right? Typical day in the market, 10 carts of apples come into the market, right? Some merchant is on the road. That's the only way into town and notices, oh, there's usually 10 carts of apples. Today, there's only one. Gonna be things are going to be out of equilibrium. There's not going to be enough supply. It's probably going to make the price go higher. That merchant slides back into town without anyone knowing, goes and buys all the apples. And then when people come to buy apples, there's no apples. They're willing to pay higher prices. This merchant who just bought all the apples up turns around and sells them at a higher price. So that's what we do. Who the hell cares about apples or oranges or whatever it is? What we want is to look for markets that are out of balance or out of equilibrium, because they move. When a market's going up, there's not enough supply or there's too much demand. You can look at it either way. When a market's going down, there's not enough demand to absorb all of the supply. We get to these important levels and we change direction. So Apple also acting very weak. All right, so I want you to keep an eye on this. Big move down 2 days in a row, no sense of a rebound. So we get up to this resistance, and what happens? We reverse. When we get to former peaks, we tend to run into resistance. And that's because there are people who bought back here who now, when the price finally gets back to their level, say, I can finally get out of this pig at break even, so I'm going to. So you get remorseful buyers placing sell orders. turns the level that was resistance into resistance again. Then some of those traders start to notice, oh, there's other sellers around. I better reduce the price I'm willing to sell at, because the buyers are going to go to whoever's willing to sell at the lowest prices. So they start to undercut each other. That's what forces us lower. Blew right through this support level like it wasn't even there. Trending lower. 81, 181.35, I think, is the next stop. I think that's where we look at it for some kind of a bounce. All right. If we go back to the S&P, okay, weak action once again, down 82 basis points, which for the S&P is a big move. We're at the bottom of this recent range. 468 is the lower side, so there's a chance we might get a little bit of a bounce. But my guess is that if we bounce, we do end up going lower, and the next stop is down here. There tends to be support at levels that were resistance. That's because you got people who sold back here who are going to be trying to buy back here. They say, I made a mistake once the price goes higher. If I could buy my shares back at the same price I sold them at, I'm going to. So if you have enough remorseful sellers placing buy orders, level that was resistance can turn into support. And we can see this on a lot of different charts. But anyway, short term, 468. If that breaks, next level, I think, is down around 460. So we saw tech looks weak. Healthcare is really the only thing that's been propping the broader market up, and it got really jacked up. I mean, look at this move. Not really any news driving it. I think it's people that missed out are jumping in, and they're the last people to the party. They're the last people that buy before things tend to reverse. And within this, we got some of these biotech stocks that are just going nuts. So keep an eye on some of these biotech stocks. I mean, look at Merck, all right? Got to resistance, overbought. We know things that are overbought that get to resistance tend to reverse. If these biotech stocks reverse, that's going to make the healthcare sector reverse. The healthcare sector is the third biggest sector in the market. Technology looks weak. Healthcare looks like it could reverse. The second biggest sector is now the financials. And they've been holding up, but could be starting to trend lower a little bit here. Now, what I want you to watch is these healthcare stocks. And of course, you got to make sure you come back because we talk about this every day. And then also something we've been following too is the bonds. I just followed this bond ETF and check this out, right? We see the same patterns in charts of different securities because what we're looking at is the psychology of the people that trade them. And whether you're a crypto trader, a bond trader, a stock trader, a commodity trader, you have the same emotions. So why do we run into resistance at a level that was support? Well, you got people back here that bought, and then the price goes lower, and a lot of them are like, that sucks. If it gets back to my level, I'm going to sell so I get out of break even. So they buy, and once it goes lower. So now we're up to resistance. And if this starts to go lower, if this resistance fails, and as we've seen a lot of times, things get to resistance and sell off because you get anxious sellers undercutting each other, and that starts a snowball effect. Well, guess what? That's going to push interest rates higher, and that could be a negative thing for the market. If sellers come into this market, there's not going to be a lot of people for them to find that want to buy. They're going to have to push the prices down. Also, too, we had this big terrorist attack in Iran today. And what I've been saying is if Israel goes and attacks Iran, that's going to be, as long as as horrific as it is, as long as things stay contained in Israel, I don't think it's going to affect world markets. But if it spreads beyond that to Iran, that affects the oil supply, so forth and so on. And that'll have, I think, a really bearish impact on our markets. But regardless of the news, we're set up for a move lower. Anyway, it's just a matter of degree. And just before I get out here, yeah, so oil's trading up about 3%. Okay, everyone, thank you so much, and I hope to see you tomorrow.